what are 5 like life hacks that people see on Instagram or all these social media sites are spending too much time on probably that are just utterly wrong when it comes to financial planning? Where do they make mistakes? What is the advice people say that is just utter BS?
Tax-free retirement, right? That's a common misconception, like on TikTok and all that. When somebody hears tax-free retirement, that's a product. It's not a solution. It's sold as a solution, but it's more of a product that is not best. These other things about layering of LLCs and trust and $50,000 of credit. I mean, the complexity of doing that, it makes it almost not worth it. Very few people actually benefit from that. If you hear something that like use your traditional IRA to buy a business, to convert it at a discounted value, to do this, like if you hear these weird tax strategies that just sound that the person who is selling them will not provide you like a private letter ruling, an IRS private letter ruling that it's a good strategy, it's probably not right for you. And then the other things is like just some basic things, right? On anything that sounds generic. I could scale your business 10 times by only working 4 hours a week. I mean, if it's too good to be true, it's probably too good to be true. Now, the 4-Hour Work Week's a great book. I mean, it's an absolutely great book, but you have to commit to that, right? It's not in place of like, it's not abdicating responsibility. You have to be so disciplined to execute that it's not like I can just do it that quick, right? It's discipline to do that. So I mean, there's a lot of hacks or wealth hacks out there. I'll give you some ones that do work for entrepreneurs. If I can give you 5 that actually work in your business, there's this thing called the Augusta Rule. The Augusta Rule refers back to the Masters golf tournament in Augusta, Georgia. So there's not a lot of hotels in Augusta, Georgia. So a senator from Georgia, got the IRS tax code to change to allow homes in Augusta, Georgia to be rented for 14 days during the Masters, and that income for those rentals to be tax-free to the homeowners. Well, as a business owner, if you own a business with a team and you do off-site meetings, do them in your home, because you can literally take money from your business and you can pay rent to you personally at your home. And if it's within those 14 days for business purpose and it's documented, that's the Augusta Rule.
And that applies not just to Augusta, Georgia, anywhere in the country.
Anywhere in the United States. So the Augusta Rule, bonus depreciation on like automobiles and equipment, that came back in 2026. Don't look over that. Family payroll. Like if you have children, if you're an entrepreneur and you have children, there's a number, it's about $14,000 that you can pay certain age kid in California, right? Because of the entertainment industry, it's basically a newborn. But in most states, it's 7 years old. You could pay them to do ordinary tasks, right? Take out trash, file, right? Give them a title, house manager. You could pay that kid $14,000, and then that kid can choose to do whatever they want to. They could pay part of your mortgage, tax-free, right? They could pay part of your mortgage. They could pay rent. They can put money into a custodial Roth IRA for their future. So family payroll is the third one.
How does that get tracked? That's so fascinating. Like how closely does it need to be tracked if you're giving your 7-year-old, your house manager now, you need to take out the trash and pay you $14,000 this year for owning that job?
It's a 1099. Like it's literally your child has a social security number. They have a name. They have your address. You literally 1099 into an account for them. Then the parent controls that money.
It's tax-free because they're underage, and so it's tax-free payment, and
it's tax deduction to the business because they're a 1099 employee. It's tax-free to them because of the standard deduction, the tax rules. And then because they have this earned income, you can make a Roth contribution for them if you want to save money for them. It gets even better, by the way, if they're like in high school and above, because then you could pay an employee an education expense also. So there's an education deduction. So you could pay them $14,000 plus the education deduction. It's about $19,000, $20,000 that you could get out of your business tax-free. And again, they can do whatever they want to them. They can pay their college tuition. They can pay their private school tuition. They can pay the mortgage, the rent in the house. There's a lot of cool things there. So that's the third one. The fourth one is like the retirement deduction. An entrepreneur, especially a solopreneur, has this thing called a solo K that they can put over $70,000 in. And if you have a spouse, you can do the profit sharing from the business to your spouse too, even if they're not an employee. So you could double up and get almost, if you're making $1 million in your business, you can get almost $140,000 into your future, into a solo K. And then the last one is the move to Puerto Rico.